Hello traders, welcome to the video. In this video, I'll be showing you a very quick strategy that you can use to catch spikes. As you can see carefully on my chart, this is not a indicator strategy. We are using simple price action and market structure for our analysis. So I want you to take note of everything I say, and also you can draw out the diagrams that I'll be drawing in this video. Without wasting our time, let's head straight to the video. As we all know, the normal market structure when market is in an uptrend, we have low, high, low, high, low, high, low, high. And then when market is in a downtrend, high, low, high, low, high, low. So this is also the same principle that we are using to catch spike in this strategy. But here we are applying support and resistance zones. So don't worry, I will show you how you can easily draw it. So let's say market have created uptrend like this, and we know that it has created another uptrend. So we know that market is likely to come like this and go. So we are going to mark a particular area where market is likely to touch and then to continue to go in an uptrend. So let's head straight to the chart and let me show you what I mean. So if you look carefully on my chart, this is 1 minute time frame and this is crash 1000. So as we all know that the crash market spikes to the upside and the bull market spikes to the downside. So this strategy works on the boom and crash 900, 1000, 600 and 500. So for the 300, it also works, but it is not as accurate as the other markets that I have given. Don't worry, I will show you series of examples. First thing we do is to go to our 5 minutes time frame. So on a 5 minutes time frame, we want to look for area where the market is in a downtrend. Go to your 15 minutes time frame. You can see over here, market is in a downtrend from this point up to this point. So I will use inside this area for your example. So let's go to our 5 minutes time frame and go to that level. How do we mark out our support and resistance zones? So what we want to see is we want to see market go to the upside, that is retracing to the upside, like this green you see over here. And once you see it reject that area, so that area is a good resistance zone. For the support level, we want to have something like this. You want to see a spike to the downside that retrace to the upside. So this is a very good support level. So if you look carefully on my chart, this is a support level, resistance level, resistance level, resistance level, support level, support level. So here is a downtrend. How do we catch these spikes to the downside? So once you see market spikes a long time, breaking this main low over here, so you know that market will continue in a downtrend. So you mark out your support level. This is the most visible support level that you have around here. So if you go to your 15 minutes time frame to confirm this support level to be visible, so you can see over here that this is a major support level. So here you see the market did not come back to that level before it spikes to the downside. So let's go to our 5 minutes time frame. So here we are waiting patiently for when market will continue to go down. So we see spike to the downside. But one thing I want you to know is that this is a good support level that can be used in the future. So you see over here, market spikes to the downside. But here we have a support level, we have a resistance level, and we have another support level. So we can mark out this area again. And we also mark out this area where market can return to. We see that after this spike, market comes to reject that area. So we can have it go to this point before it spikes to the downside. So our stop loss will be above here, resistance level. So our stop loss will be above that resistance level. If the market comes to take us out, so this will be our next strong level. The market will spike to the downside. So here we see that immediately market touches this level, it spikes to the downside. So after that spike, then we mark out our next support and resistance level. We see that here market touches this point, using it as a support, then here as a resistance. So we bring it to this level. Then we go to our 15 minutes time frame to confirm that level. We see that this is not a support over here. It is just market reacting at that level. Then we go to our 5 minutes time frame again. So here we see the market did not come there. Then we have a spike. The market continues to goes up again. So this area will be our next resistance level. We have it here because we know the market is still going down. Our bias has not changed. So this area is also a good level to mark. See, the market is still a support level that can be used. Our market have used as a resistance already. Then don't forget that we still have a level around this point. But we are not expecting markets to come all the way to this level before it spikes to the downside. So anything that can make market comes to this level, that means the markets have changed trend to the uptrend. So here we see that market comes, then immediately it touches that level. You can see carefully, we have a spike to the downside that breaks this lows. So we go to our 15 minutes time frame. So we can see over here that this is a very strong resistant level where markets have rejected from. We see how that area holds. Then we go to our 5 minutes time frame after we have the break. So already according to our market structure, retrace, break, retrace, retrace again, because this is a consolidation, then it's break. So once you have the break, we know that market is likely not to come to this level again before it breaks. So we take our tool and mark out the next support and resistance level. This is one. We see our market goes to the upside and break. Then this is another one over here. Then this is the last one. This is the last area where market can come to before it breaks. So we have this, we have this, and we have this. Anything that can make market go above this level means that market has continued in an uptrend. So you can see over here, immediately market retrace up to this level, which is this zone, reject level again, and then spikes to the downside. Hope you understand what I am saying. So how did this spike come about? So here market has broken this low. So this is the last zone where market must not break again. So I will take a deep dive in the market structure once I finish explaining this. So how did this spike come about? Because this low have been broken already. So here is a good support level. This is a resistance level. So in between it, we also have another one. So we go to our 15 minutes time frame to confirm that level. So here we see that this is a valid one, this is a valid one, and this is just a little retracement. So we will close that. So this will be our entry, and our stop loss can be above here because we don't expect market to come to this level. So we go to our 5 minutes time frame again, enter to that level, then spike to the downside. So you can catch this trade on the 1 minute time frame also, or the 5 minutes time frame, but using your 15 minutes time frame as a time frame to confirm valid and invalid zones. So market structure, high, low, high, low, high, low, high. So I will explain for this uptrend, and the reverse will be for the downtrend. Let's say market has been coming this way. From your 15 minutes time frame or the 5 minutes time frame, when you see this high goes above the last low, you can mark that out on your chart if you want. Then you know that markets have changed trend. This is what the SMC traders calls change of character. So it has changed trend around this point. And you know that when markets come down, you are not expecting it to go below this low before it spikes to the upside. So in between this low and this high is where you look for your support and resistance zone. You can see over here, enters and spike to the upside. Hope you understand what I'm saying now. Then after you have the spike to the upside, then your next focus will be from this low to this high. So in between these two levels, you want to look for area of support and resistance. You can see over here, enters into that level and spike to the upside. Sorry about that. So you are not expecting markets to come again and take out this low after it has given you this high, breaking this high. So if you see market now moves like this, break this low to the downside like this, then you know that market has changed structure, so it is likely to continue in a downtrend. So in this situation, for the bull market, you have no trade. So you will wait for when these conditions have been met all over again. Hope you understand what I am saying. If you take your time to this and you spend a lot of time with what I just explained to you, this is gold mine. So you can go back on your chart and see for yourself. Then after that, go on your demo account, try and catch some spike using the support and resistance zones that I have taught you. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.